You are well known for your financial forecast on world finance. Is Italy broke?
No, I don't think that Italy is broke, and you cannot speak of a country generically being broke. You have to look at the assets and liabilities of parts of that economy. You have assets and liabilities of the government, of the private sector, households, banks, corporates, and then of the country relative to the rest of the world. So if you're asking about our excesses of debt in Italy, overall I would say the public sector has too much debt, while the household sector in Italy has a lot of wealth and savings, and the overall country doesn't have a lot of foreign debt. Certainly the situation of the fiscal side of the economy is difficult. Budget deficits have been reduced now to 3%. There is a primary surplus of about 2%, but public debt is 130% of GDP. And with slow economic growth, with real rates are still high, and a primary surplus is too small, the debt to GDP ratio of the public sector is still rising. It's still sustainable for now, but it cannot keep on rising forever. If over the next few years, and it's going to take many years, the Italians are not going to be able to stabilize and then reduce that public debt as a share of GDP, eventually that stock of public debt could become unsustainable, but I would not say it is unsustainable today.
Do you have a core for us?
Well, in Italy, there has been stagnation of per capita income for the last decade, low economic growth, and I think that there are some things that Italy can do for itself, and there are some things that Europe has to do for Italy. I think that even more so than the fiscal austerity, in Italy needs to accelerate the kind of structural reform that will increase productivity growth and increase the potential growth of the country. That's what Italy has to do for itself. But there are also slow growth in Italy and the periphery of the Eurozone because macro policies are too tight. I think the European Central Bank has to ease monetary policy. They have to try to weaken the value of the euro. You need less fiscal austerity in the periphery. You need some fiscal stimulus in the core. So in addition to long-term factor like supply-side structural reform that increase potential growth, you also have to increase aggregate demand. And aggregate demand requires some monetary and fiscal easing and some weakening of the euro to be able to jumpstart economic growth. But that depends on policies that Europe has to do, not just Italy by itself.
Yeah. So it's a cure for all Europe, I guess. Have any suggestions for the Italian investors?
Well, like any other investors, I think that the Italian investors should be having a diversified portfolio. You want in this world to hold not only Italian and European equities, but if you want to have an equity exposure, you have to have exposure to other markets. I think that the US market, the Japanese market, some better emerging markets can have higher returns than some European. The better credit emerging markets are in Asia countries like like Korea, like Indonesia, like Singapore, or there are other emerging markets in Latin America that may be doing well, like Chile or Colombia or Mexico. So I think one of the first principles is international diversification, not to have a home bias, and have a diversified portfolio doesn't include only equities but also safer bonds. It includes some commodities, some exposure to emerging markets.